Welcome to Money Internet. In this video, we're going to be discussing the current bull run in the stock market and highlighting 3 stocks that you should keep an eye on. As the market continues to soar, it's more important than ever to be informed about which stocks have the potential for big returns. But before we dive in, please keep in mind that this is not financial advice, and you should always conduct your own research. Now, let's get started. 1. How to identify a potential stock. When looking for potential stocks to invest in, there are a few key factors to consider. One important metric to pay attention to is the company's earnings per share EPS. This indicates how much profit the company is making per share of stock. Additionally, it's important to look at the company's revenue growth, as well as its debt-to-equity ratio. Companies with high revenue growth and low debt-to-equity ratios are generally considered to be strong investments. One way to identify potential stocks is by looking at the performance of stocks during previous bull runs. For example, during the last bull market, which ran from 2009 to 2020, the technology sector was one of the biggest winners. 3 stocks that saw significant returns during this time period were Amazon AMZN, Apple AAPL, and Microsoft MSFT. At the bear market bottom in 2009, Amazon stock was trading at around $70 per share. During the bull market, the stock reached an all-time high of $3,552 per share in September 2020, representing an increase of over 4,000%. Apple stock was trading at around $85 per share at the bear market bottom in 2009. During the bull market, the stock reached an all-time high of $164 per share in August 2020, representing an increase of over 90%. Microsoft, the stock was trading at around $20 per share at the bear market bottom in 2009. During the bull market, the stock reached an all-time high of $232 per share in December 2020, representing an increase of over 1,000%. These stocks not only had strong financials, but also had a clear growth potential and a strong brand. It is important to note that past performance is not a guarantee of future results, and it is important to conduct your own research and due diligence before making any investment decisions. However, looking at the performance of stocks during previous bull runs can provide valuable insights and help identify potential investments. 2. How to recognize a bull run. A bull run is a period of time during which stock prices are consistently rising. One way to recognize a bull run is by looking at the overall performance of the market. If the major indexes, such as the S&P 500 or the Dow Jones Industrial Average, are consistently setting new highs, it's likely that a bull run is in progress. Additionally, during a bull run, you may also see more positive sentiment among investors and increased buying activity. Here are 5 signs that a bull run may be starting. Rising stock prices. One of the most obvious signs of a bull market is a consistent upward trend in stock prices. This can be seen in major stock market indexes, such as the S&P 500 and the Dow Jones Industrial Average, as well as in individual stocks. Increased investor sentiment. During a bull market, investors tend to have a more positive outlook on the market. This can be seen in things like increased trading volume, as well as a rise in the number of initial public offerings (IPOs). Economic growth. A strong economy is often a sign of a bull market. Factors such as low unemployment, rising GDP, and strong consumer spending can indicate that the economy is in a good place, which can lead to a bull market. Low interest rates. Low interest rates can make borrowing cheaper, which can encourage investment and spending. This can in turn lead to a bull market. Rising corporate earnings. A rise in corporate earnings can be a sign of a bull market, as it indicates that companies are performing well, which in turn can lead to higher stock prices. It is worth noting that these are general indicators, and none of them are a guarantee for a bull run, but can give some indication of the market trend. It's also important to conduct your own research to keep an eye on the news. 3. Stocks to watch. During this bull run, there are a few stocks that have the potential to bring big returns. The first stock to watch is Apple AAPL. With its strong brand and growing services division. Apple is well positioned to continue to thrive in the current market. The company has a diverse range of products and services, including the iPhone, iPad, Mac, Apple Watch, AirPods, and more. Additionally, the company's services division, which includes the App Store, Apple Music, iCloud, and Apple TV Plus, is growing rapidly and becoming an increasingly important part of the company's revenue. Another stock to keep an eye on is Amazon AMZN. The company's dominance in e-commerce and its growing cloud computing division make it a strong investment. Amazon is the largest e-commerce company in the world, with a market share of around 40%. Additionally, the company's cloud computing division, Amazon Web Services AWS, is the largest player in the market, with a market share of around 32%. AWS provides cloud-based services to businesses and individuals, and it's a major source of revenue for Amazon. The company also has a strong presence in the advertising and grocery markets, which are expected to grow in the future. Lastly, electric vehicle manufacturer Tesla TSLA is also a stock to watch as the demand for electric vehicles continues to grow. Tesla's electric vehicles have been well received by consumers, and the company has been expanding its production capacity. Additionally, the company is also investing in battery technology and solar power, which are expected to be major growth areas in the future. Furthermore, the company has a strong brand and has been generating positive cash flow in the recent years, which is a positive indicator for the future. These three stocks stand out for their strong financials, strong brand, and clear growth potential. Additionally, they also have a competitive advantage over their peers in their respective industries. Apple's brand and ecosystem give it a strong competitive advantage in the technology industry. Amazon's dominance in e-commerce and cloud computing make it a strong player in those markets. Tesla's focus on electric vehicles and energy storage gives it a strong competitive advantage in the automotive and energy industries. However, these three stocks have the potential to bring big returns during the current bull market, and they are worth keeping an eye on. Write in the comments which stocks you think will go through the roof in the next bull run. We'd appreciate it if you would support our channel. Please click the subscribe button and then click the bell icon. For what to expect from a bull run. During a bull run, it's common to see stock prices rise significantly. This can lead to significant gains for investors who are able to identify and invest in the right stocks. However, it's important to keep in mind that bull runs can also be followed by bear markets, where stock prices fall. Therefore, it's important to have a well-diversified portfolio and not to invest more than you can afford to lose. It's worth noting that bull runs can vary in duration and intensity. For example, the bull run that started in 2009 and ended in 2020 lasted for more than a decade and saw the S&P 500 index increase by over 300%. On the other hand, the bull run that started in 2002 and ended in 2007 lasted for 5 years and saw the S&P 500 index increase by around 50%. During the last bull run, many investors were able to achieve significant returns by investing in technology stocks such as Amazon, Apple, and Facebook. Additionally, other sectors such as the healthcare, consumer discretionary, and industrials also performed well during the bull run. Furthermore, the bull run was also characterized by a low interest rate environment, which encouraged borrowing and spending and helped fuel the bull market. However, bull runs also have their risks. As the market continues to rise, investors may become overconfident and start taking on more risk than they can afford. Additionally, bull runs can also lead to market bubbles, where stock prices become detached from fundamentals and become overvalued. This can lead to significant losses for investors when the market eventually corrects. It's important to keep in mind that bull runs can be exciting and provide significant returns, but it's also important to be aware of the risks and to have a well-diversified portfolio. Additionally, investors should also be prepared for the possibility of a bear market, and have a plan in place for managing risk. It's worth noting that past performance is not a guarantee of future results, and it's important to conduct your own research and due diligence before making any investment decisions. However, understanding the characteristics and potential risks and rewards of bull runs can help investors make more informed investment decisions. 5. Recommendations for the next bull run. When it comes to investing during a bull run, it's important to have a well-diversified portfolio and to conduct your own research. Additionally, it's also a good idea to have a solid investment plan in place with clear entry and exit points. New recommendation. One sector that may be worth considering during the next bull run is the renewable energy sector. With the increasing focus on sustainable energy and the transition to a low-carbon economy, companies in this sector are likely to see strong growth in the coming years. Some stocks to consider in this sector include NextEra Energy, Brookfield Renewable Partners (BEP), and Canadian Solar CSIQ. Investment plan. Set a target allocation for the renewable energy sector in your portfolio. Research and identify stocks in the sector that have strong financials, growth potential, and a competitive advantage. Set a target entry price for each stock and a stop-loss level to manage risk. Monitor the stocks and the sector regularly and make adjustments to your portfolio as needed. Have an exit strategy in place, such as selling if a stock reaches a certain price or if the sector as a whole starts to underperform. The best entry and exit points will depend on an individual's investment goals, risk tolerance, and market conditions. It's important to keep in mind that investing during a bull run can be risky, and it's important to have a plan in place to manage risk. Additionally, it's important to be aware of the possibility of a bear market and to have a plan in place for managing risk during those times as well. It's important to remember that this is not financial advice, and you should always conduct your own research before making any investment decisions. Additionally, it's always good to consult with a financial advisor before making any investment decisions. In conclusion, a bull run can be a great opportunity for investors to achieve significant returns. However, it's important to have a well-diversified portfolio, conduct your own research, and have a solid investment plan in place. Additionally, it's also important to be aware of the risks and have a plan in place for managing risk. The renewable energy sector may be worth considering during the next bull run, with companies in this sector likely to see strong growth in the coming years. I hope this video has provided valuable insights and information on how to identify and invest in potential stocks during a bull run. Remember that this is not financial advice, and you should always conduct your own research before making any investment decisions. Thank you for watching, and I look forward to continuing to provide valuable content on the topics of crypto, finance, stocks, and Bitcoin. Don't forget to subscribe to my channel for more updates and new videos. Thank you for your attention, and have a great day.